Man, oh man, Amazon, the stock that was supposed to vertical line forever into infinity, is down 7% in the aftermarket after releasing some horrible, disappointing earnings for the second quarter of 2024. Let's dive into what happened and see why Amazon is down over 8% overall today. Amazon today announced financial results for its second quarter ended June 30th, 2024. Net sales increased 10% revenue growth for this massive business to 148 billion compared with 134 billion in the second quarter of 2023. This excludes a 1 billion unfavorable impact in foreign exchange rates. That happens to international businesses. North America segment sales, America, Canada, increased 9%. International sales segments increased 7%, or increased 10% excluding changes in foreign exchange rates. That's what happens when you have weaker currencies overseas. They get converted into fewer dollars, and then vice versa. AWS segment sales increased 19% year over year to 26.3 billion. This is freaking huge, okay? AWS is by far Amazon's most profitable segment. As a matter of fact, if we look at the total operating income, what percentage of operating income is AWS? Well, AWS's operating income was 9.3 billion out of total operating income of 14.7 billion. So AWS has a roughly 63% of all operating income, okay? Despite being a much smaller percentage of revenue, it's much more profitable. The North America segment had 5.1 billion of operating income from 14.7. 35.7% of Amazon's operating income comes from the North America segment. The international segment basically provides almost no profit at all at roughly $300 billion or $1 million of revenue or operating income, excuse me. So this, in my opinion, is actually really impressive. But I guess the market wasn't happy with that. Net income increased 13.5 billion in the second quarter, or 1.26 per diluted share, compared with 6.7 billion or 0.65 cents. So imagine last year you got 65 cents in profits from your business, and then you check your little dividend account or your little profit account, whatever you want to call it, and the next year you see 1.25. That's a pretty big growth, okay? Second quarter 2024 net income includes a pre-tax valuation gain of 0.4 billion, including non-operating income from common stock investment in Rivian Automotive. Okay, that's clown stuff right there. I wouldn't even worry about it. Well, out of all things, Rivian, really? Compared to a pre-tax valuation gain of 2.2 billion or 200 million from the investment in the second quarter of 2023. So they basically had a $200 million plus up of profit from their investment in Rivian. Wow, that's freaking amazing. It's clown stock. Operating income increased 75% to 108 billion for the trailing 12 months. Trailing 12 months. What about year over year? Compared with 61.8 billion for trailing 12 months ended June 30th, 2023. Okay, so operating income is up massively. Free cash flow is up ginormously. 53 billion of the trailing 12 months versus 7.9 million for the trailing 12 months ended June 30th, 2023. Huge increase in operating cash flow, huge increase in free cash flow. But this is for the trailing 12 months, not the most recent quarter. Okay, and then they talk about their lease payment, paying off financing leases and principal repayments, et cetera, et cetera, et cetera. Now, one thing that I really like about Amazon is they're actually pretty competitive in the streaming industry. As a matter of fact, I think they, in my opinion, are probably the best provider of shows at this point. Fallout, did you guys watch that? Pretty freaking cool, okay? I really enjoy their shows, but Amazon basically has a billion things going on. Like, I don't even know how you keep track of this company, okay? But that's that. So they also offered some financial guidance. Net sales are expected to be between 154 billion and 158.5 billion, or to grow between 8 and 11% compared with the third quarter of 2023. This guidance anticipates an unfavorable impact of approximately 90 basis points from foreign exchange rates. So, the market didn't like that Amazon is only projected to grow their revenues year over year between 8 to 11%. That was apparently a big problem. I don't see the issue, okay, but whatever. Operating income is expected to be between 11.5 billion and 15 billion, compared with 11.2 billion in the third quarter of 2023. That's interesting right there. So operating income could barely budge on the low end, or could go up by approximately 40% on the high end. That's a pretty broad range of variance in operating income. Why is that? That's something that I want to know. That is a huge variance right there. But if they hit the low end, then basically their operating income is flat year over year, especially when you compare it to how they did before, massively growing their operating income, almost doubling it, okay, from Q2 2023 to Q2 2024. Now, for 3 and 3, Q3, we have potentially almost no gains in operating income. So we go look at the financial statements for the 3 months into June 30th, 2023 and 2024. The most recent numbers are on the right here. So every second batch of numbers is the most recent numbers. So this is their reconciliation of cash flow. So their operating cash flow for the 3 months, because remember they talked about the last 12 months, increased by 53%. So remember they said operating cash flow increased by 70-something percent. Year over year for the current quarter, it's only 53%, which is still impressive. Okay. Capital expenditures, they actually spent $17.6 billion on property, plant, and equipment in the most recent quarter versus $11.4 billion in the prior quarter. So free cash flow, let's see, 25,281 minus 17,620. So it's 7,611, and then we have roughly, let's see, 16,467 minus 1,1,455. Free cash flow is up roughly 50%. Okay, that's good. And that's even after they're spending, almost 50% more, probably 50% more on property, plant, equipment. Still pretty good free cash flow growth. So they have so much positive operating cash flow that they can dump billions and billions and billions of dollars into property, plant, and equipment. When we look at their financing activities, the main thing that I see is they repaid some long-term debt. They paid $2.1 billion more of their long-term debt in this quarter compared to last year. So overall, positive operating cash flow, strong growth, even quarter over quarter, strong free cash flow growth, even with the fact that they're investing like $6 billion more this quarter in property, plant, and equipment than last year. Very powerful growth in AWS, which is their most profitable segment. I think, what do we say? It was like 63% of all the profits comes from AWS. I don't really see the problem. I mean, the guide, I guess the market was expecting more. That's how it works, They're guiding between 8 and 11% for revenue growth for next quarter compared to the prior year. But the operating income, that's one thing I really have questions about, is why is it so potentially so low? That's a huge variance right there. I mean, maybe there's some kind of impairment coming. I don't freaking know. Okay. We look at their income statement. We can do that real quick. Product sales, service sales. Let's see if there's any major changes in expense accounts. Fulfillment, not really up that crazy. Tech and infrastructure, nothing crazy. A little bit of cuts in sales and marketing, cuts in general and admin. So they're dumping more money into tech and infrastructure and fulfillment, and they're cutting money in sales and general and admin. Let's see. Interest income is up. That's because of interest rates. Interest expense is actually down because they're paying off debt. Let's see. Shares outstanding. A little increase in shares. What percentage increase in shares outstanding do we have? Roughly a 2.5% increase in shares outstanding from the prior year. Interesting stuff there, but that still didn't really hurt their diluted earnings per share, which basically almost doubled year over year, which is pretty freaking good. Okay. Let's see. So we got operating income from North America. We know that's up pretty significantly. International, the prior year they had a loss in their international operating income. This year they have a slight profit, but it's a very small percentage. AWS has almost doubled operating income year over year, which is pretty impressive. Okay. So they show you growth by segment. The fastest growing we know is AWS. International was the weakest because of currency, and then North America was 9%. 61% of total sales are North America. International, 21% of total sales. AWS, 18%. Isn't that funny? 18% of the revenue generates 63% of the profits. That's why AWS is such a big deal with Amazon. Okay, we look at their balance sheet. They got 71 billion of cash. That's all. Good God, these companies have a lot of money. Like, think about that. Oh yeah, I've got 71 billion dollars of cash. No big deal. $71 billion of cash, 17.9 billion of marketable securities. So their liquid cash is roughly, this is highly liquid cash, roughly $89 billion of cash they could access in a heartbeat. Their current liabilities are $158 billion. So their quick ratio actually isn't that great. Oh, we excluded the receivables there. Why do they have receivables under inventory? Let's do this again. So we have cash, cash equivalents, marketable securities, and our accounts receivable. So they have roughly They have $139 billion of fairly liquid cash. They're going to it's either cash or they're going to get it very soon, or they could sell it and generate cash. Versus current liabilities of 158 billion, of which 16 billion is unearned revenue. So 142. Okay, their quick ratio, their ability to meet their short-term obligations seems to be fine. I don't know why they have inventories above accounts receivable, but whatever. I guess they turn it over that quickly. Let's see, long term. So they have 220. Look at that growth in property, plant, and equipment, guys. They grew their property, plant, and equipment by almost 10% in the course of 6 months. That's insane. Okay, 6 months. They grew their property, plant, and equipment by 10%. They are investing a ton into property, plant, and equipment. It's insane. Leases are barely up. Goodwill is flat. And other assets, I don't know what that is because it doesn't tell me. Long-term debt, let's see. Slight increase in long-term leases, nothing crazy. We know they paid down debt, about $4 billion. Their long-term debt, they own most of their long-term assets free and clear. They have $220 billion that they've spent net of depreciation on property, plant, and equipment. And they have roughly $54 billion of debt. That's not that bad. They could literally take their cash and just pay off all their debt right now if they wanted to. Let's see. Common stock. There's a little bit of stock issuance. No stock buybacks that I see. Let's see. Additional paid-in capital's up. So that's issuance, probably for stock options. And accumulated other comprehensive income, that's probably currency adjustments. And retained earnings is up because they recorded profits. So overall, very solid balance sheet. There's really nothing to hate. I guess they just aren't growing as fast as people wanted them to, So let's see. Growth. What is the fast? So advertising looks like it's the fastest growing part of the sales at 20%. Grew 20% year over year, which is pretty impressive. Other, I don't know what this is down 6%. So the fastest growing revenue provider is advertising services, followed by AWS at 19%, followed by third-party sellers at 13%, and then, physical stores 4%, kind of anemic, online stores 6%. Let's see. Okay, and they actually had a 5% increase in employees. So a lot of places are firing employees, not Schlamazon. So overall, AWS is basically the Mac Daddy of Amazon. AWS in the North America segment. International is there for fun, but that could provide potential future growth. I would look into why they're guiding for such lower operating income or flat operating income compared to the prior year. And other than that, I don't really see a big issue with these earnings. Talk to you later. If you like this video, don't forget to hit like and subscribe. For $50, you can have a sponsored video. Please see the pinned comment below. Buy my book, Stop Being a Broke Loser. It's on Amazon. And if you want a personal one-on-one tutoring session, you pay me $75 an hour. Talk to you later.